This is Nightly Business Report with Tyler Matheson and Sue Herrera.
History on Wall Street. The Dow tops 25,000 for the first time, marking the fastest 1,000-point sprint ever for the blue chip index.
Driving the rally. If you're wondering why the markets are soaring, look no further than the economy.
And buzzkill. Attorney General cracks down on the marijuana industry, signaling big changes for that budding business. Those stories and more tonight on Nightly Business Report for Thursday, January 4th.
Good evening, everyone, and welcome. There was no winter chill on Wall Street today. The stock market remains red hot. The Dow plowing through a new milestone, 25,000, and it did so at a record pace. It is the latest show of strength that has taken that blue chip index up more than 25% over the past year. The economy is growing, the labor market is strengthening, as evidenced by today's private payroll jobs report. Corporate profits are rising, and it didn't go unnoticed by the president.
We broke a very, very big barrier, 25,000. And there were those that say we wouldn't break 25,000 by the end of the 8th year. We did, in fact, break 25,000, very substantially break it very easily. So I guess our new number is 30,000, but what it means is every time you see that number go up on Wall Street, it means jobs, it means success, it means 401ks that are flourishing.
So here are the final numbers. The Dow Jones Industrial Average advanced 152 points to 25,075. The Nasdaq added 12, and the S&P 500 was up 10. Bob Pisani takes a look at the first big milestone of 2018.
The Dow has passed 25,000, quite an impressive move considering it hit 20,000 January 17th last year, almost exactly a year ago. Many are still amazed that the market keeps advancing, but it's not incomprehensible. It's been a global rally. Reuters reported China would stick with GDP growth around 6.5% as a goal in 2018. The Japanese market just closed at a 26-year high. Europe was up nearly 2%. Eurozone businesses reported the strongest activity since 2011, and the ADP report was much greater than expected. This has been a trend recently. Economic reports continue to come in above expectations. And don't forget, tax cuts have added fuel to record earnings. Instead of S&P earnings growth of 10% in 2018, strategists and analysts are talking about 15% earnings growth. Okay, so what could kill the rally? Historically, the two biggest killers of bull markets have been recessions, number one, and two, aggressive Fed rate hikes. There's no recession on the horizon. If the economic data continues to surprise, the Fed may get more aggressive, but that's a story for later in the year. The bears also argue the market's expensive. It's true, but when you have an economic expansion like this with a rise in earnings, the multiples can be higher than normal. The final bear argument that a terrorist attack or a serious conflict with North Korea may drop the markets, well, that's a real concern, but the markets have learned not to price in these events unless they are imminent. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
So which stocks played a major role in taking the Dow to its new high? Our Dominic Chu takes a look at that one.
It took less than a year for the Dow to march from 20,000 to 25,000. Now, let's take a look at some of the names that really powered that big 5,000-point move, because we all know the Dow Jones Industrial Average is a price-weighted index, so the stocks with the highest share prices actually move the index the most. That being said, check out that move, 5,000 points in a little under a year. The biggest contributor to the Dow during that span, Boeing, the aerospace giant, which added nearly 900 points to that 5,000-point rally. United Health Group, 429 points added. Caterpillar, 407 points. 3M, the industrial conglomerate, 406 points, and home improvement retailer Home Depot adding 355. Now, if you add these up roughly, you'll see that just about half of the Dow's gains between 20,000 and 25,000 were just these five stocks alone. But it's not all positive. Some of the names didn't fare all that well. Check out some of these. The pharmaceutical giant Merck has dragged the Dow by 27 points during that same time span. General Electric, no surprise there. It's not as big a high-price stock anymore, but still, it dragged 82 points off the Dow's performance. And then Big Blue, IBM, an underperformer, has dragged 114 points off the Dow. So as we talk about the march for the next leg higher in the Dow Jones Industrial Average, we'll talk about whether or not some of these stocks can turn around or where the momentum in shares like Boeing, Home Depot, and others can maintain that point upside. For Nightly Business Report, I'm Dominic Chu.
To the economy, where U.S. employers created 250,000 jobs last month, much more than expected. It is the latest report pointing to strength in the economy. And as Steve Leisman tells us, it's the economy that's playing an important role in the stock market's rally.
Some stock market surges take flight on the hot air of just hopes and dreams. But this one seems to have some solid economic data keeping it afloat. We got more proof of that today with an ADP report suggesting 250,000 jobs created in the private sector in December. That was far more than the consensus and far more than economists expect for tomorrow's jobs report from the government. ADP adds to a running series of economic surprises that has seen Goldman Sachs' Economic Surprise Index surge to new levels. Bottom line is the Street keeps underestimating the strength of this economy. All that adds up to overall economic growth that for 3 straight quarters looks to be running well ahead of potential of just around 2%. The second and third quarters, in fact, offered the first consecutive quarters of 3+% growth since 2014. And the CNBC Rapid Update for the fourth quarter estimates a still healthy 2.7% growth rate. There are definitely reasons for caution. The stock market has high hopes for the effects of the tax cuts, and those tax cuts better deliver to justify recent market gains. In addition, the Federal Reserve is raising rates as many as 3 times this year, in part to slow the economy. But for now, better growth and bigger corporate profits are providing real buoyancy for this stock market. For Nightly Business Report, I'm Steve Leisman.
Well, it seems like nothing 4 days into this new year can slow the raging bull market. One bear says the conditions are ripe for a potential correction over the next couple of months. But a market bull says there's still plenty of room to run. And tonight, we are bringing them together. Oh, what a fun food fight it will be. Phil Blancato is our bull. He is the president and CEO of Ladenburg Thalmann Asset Management. Barry James is the president of James Advantage Funds. And Barry is our bear. All right. I think, Barry, the burden should be on you to make the bear case here. You think we could have a 15% or more correction in either the first or the second quarter. Give me the 3 reasons why and the one thing I should do about it.
Okay, the 3 reasons. Number 1, the Federal Reserve is not turning on the juice. They've turned it off. They are doing quantitative tightening. 93% of the rally was associated with quantitative easing. So if you have quantitative tightening, that could be something. A necessary precondition, of course, is extended valuations. Price to sales on the S&P are the highest that they've ever been. You look at other measures like PE ratios, they're maybe not as high as they were in the late 90s, but they are back where they were in 1987. In addition, we have the Federal Reserve, of course, raising rates, not at the pace that we saw in 87. But 1987, something, Bob was talking about, no recession in sight. I agree with that. But half the time you get these 15% downturns when there is no recession in sight. So it can happen. So you've got some pieces of the puzzle in place that are necessary conditions for a pullback. They don't necessarily mean there will be one. We would say lower your equities, and especially the e-commerce area. There's a mania in there. It's very similar to the last 6 bubbles that we've studied, and we would say that would be the area that would be the one that would be the most dangerous.
There's a lot in there, Phil, to pick apart, certainly, but you do think that there's more room to run.
I do.
Why?
I do. Well, when you look at the composite of what's going on, it's pretty powerful. I mean, when you infuse expensive stocks, they're not cheap. They're roughly 3% above the historical average on the S&P. But when you infuse a tax cut, that's going to push your E higher, and it's going to justify this higher price. Secondly, I don't disagree. The Federal Reserve is getting a little bit more aggressive, but look at where interest rates are. We all grew up with rates being significantly higher. Companies are earning more than the cost of their debt. And until that changes, until rates go much higher, it's not effective. You don't have to really worry about it. So cheap debt, a tax cut, and then you mentioned it on your dialogue. The economy's doing really pretty well. Couple that with global expansion. So and when you think about the U.S. market, we have been the bellwether, the leader. Okay, maybe this is an opportunity to rotate a little bit, to diversify, have some emerging markets which are really going well, Europe being much cheaper, but I don't think it's come to an end simply because of low interest rates, a healthy economy, expanding economy, and I don't agree that stocks are, in my opinion, are not expensive.
Let me push back on the bull a little bit, and Sue, you can push back on the bear if you'd like.
You got it.
Deal.
We'll double team.
There are a lot of expectations built in here that the economy is going to do very well, and that profits are going to come in nicely, and that there's going to be an investment boom in this country. What if some of those things don't come true, or if, for example, the market becomes dissatisfied with even good economic or corporate news?
Good point. And by the way, a 15% correction, those are relatively healthy. They're not a bad thing. It's kind of like a brush fire. You clean up the brush. But in this case, it's really hard to draw that scenario with interest rates this low and earnings is where they are. You've given everybody a shot of steroids here to really pump up earnings with this,
with the tax cut.
That's a significant reduction, especially in that small and mid space. And that's why in this first 6 months, you get a pass. Beyond that, okay, fair dialogue. But in the first 6 months, you just got too much of a benefit coming from it.
Barry, let me turn to you on the Fed. There are those who think, I understand the Fed is tightening, but to Phil's point, we're coming from such low levels that the impact on that might be somewhat muted, even if they do become more aggressive in the face of slightly increasing inflation.
That's absolutely true. And although the one thing, this is kind of surprising, when you look at tax cuts, I just wanted to address that. Historically, from Kennedy through G.W. Bush, after the tax cut, the 1 year later, stocks don't do very much because it was all built in ahead of time. And we're just seeing the effects today of people being able to digest the tax cuts that came out at Christmas time. So it's only natural that they're opening up their presence and the stock prices are rising. In terms of the low interest rates, yes, 1987, they rose very, very rapidly and they went very high. We're not anywhere near that. And I would agree that that is not the precursor, but quantitative tightening, and they're going from $10 billion a month to $50 billion a month. I think that that's going to be a backdrop that will eat away at some of that confidence.
Gentlemen, you were very nice to one another. Thank you very much. You can come back again. Phil Brancato of Ladenburg Thalmann Asset Management. Barry James, always good to see you with the James Advantage Funds.
We turn to Washington now, where President Trump wants to open nearly all waters to offshore drilling. The proposal lifts a ban imposed by President Obama. It gives the energy industry access to drilling rights in most parts of the Pacific, near California, and in the Atlantic, near Maine and the eastern Gulf of Mexico. Interior Secretary Ryan Zinke said the country is embarking on a new path for energy dominance in America.
A seismic shift could be coming to the relatively new legal marijuana industry. Attorney General Jeff Sessions today reversed a number of Obama-era guidelines that discouraged the federal government from interfering with state-legalized marijuana, and it comes just days after weed went legal in California. Didi Roy is in San Francisco tonight.
I dub thee free.
Days after cannabis companies ushered in the legalization of recreational marijuana in California with fanfare, a blow from the federal government. Attorney General Jeff Sessions gave U.S. attorneys the green light to aggressively enforce federal laws against marijuana, even in states where it is legal. Reaction was swift. Democratic leader Nancy Pelosi saying the decision, quote, bulldozes over the will of the American people and insults the democratic process under which majorities of voters in California and in states across the nation supported decriminalization at the ballot box. Cannabis entrepreneurs are also weighing in, one telling me it could be devastating for business and would energize the black market. Another saying the industry would move to DEFCON 5 because of this. And the vice president of Marijuana Business Daily says the move will sow more seeds of uncertainty and that businesses could be in for a bumpy ride. But some businesses remain bullish. The CEO of another cannabis company, Baker, says we remain optimistic about the state of the industry. And the executive vice president at Aurora, a Canadian cannabis company, tells me the effect will be a positive for large Canadian producers like Aurora because it will drive U.S. investment and investors north of the border to publicly listed Canadian companies. It remains unclear how the federal law will be enforced and whether medical marijuana companies could be targeted as well. Analysts had predicted that California's recreational marijuana market would be worth $6 billion by 2021. For Nightly Business Report, I'm Didi Roy, San Francisco.
Still ahead, are computers and smartphones worldwide at risk of being hacked because of a flaw in a popular chip?
The Securities and Exchange Commission has a warning for investors. The chairman, Jay Clayton, urges extreme caution on cryptocurrencies like Bitcoin. He said that his agency is pursuing some bad actors, but added that regulators may not be able to return lost investments to investors.
And Merrill Lynch is banning clients from investing in Bitcoin. According to the Wall Street Journal, the bank's roughly 17,000 financial advisors cannot pitch investments related to the cryptocurrency. They also cannot execute client requests to trade Grayscale's Bitcoin Investment Trust, which is traded over the counter as opposed to through a formal venue like the New York Stock Exchange. The bank has concerns about the suitability of that product. The latest move expands an existing policy barring access to newly launched Bitcoin futures contracts.
We told you last night about a reported flaw in Intel's chips, and tonight there's a big concern among businesses and consumers that a vast number of computers and smartphones may be susceptible to hacking. Shares of the world's largest chip maker fell again in trading today by nearly 2% on an up day. Josh Lipton has the details.
Tech companies are on high alert. Microsoft, Amazon, and Google are all now scrambling to push out software fixes to two security vulnerabilities that could impact millions of computers all over the world. The bugs, called Spectre and Meltdown, make everything from smartphones to servers potentially vulnerable to hackers. Intel confirmed reports that its chips are vulnerable, but CEO Brian Krzanich told CNBC that it's not just Intel, that many other tech manufacturers and their devices are at risk too.
I can't tell you exactly on the other guys, on the other products, exactly which ones are affected, but definitely most of the modern high-performance processors that you're seeing in your leading-edge products across that array that you talked about, phones, PCs, everything, are going to have some impact.
But rival AMD seemed to push back on that point, saying in a statement, due to differences in AMD's architecture, we believe there is a near zero risk to AMD processors at this time. In response, investors have sent AMD stocks surging higher. On the other hand, Intel has been under pressure. Importantly, Krzanich said there is no evidence that any hacker had actually taken advantage of this vulnerability. It's a risk that, as far as we know, no one has exploited. And Krzanich says there's already a fix to the problem. Intel does not expect any material financial impact from the issue. Tech giants are moving quickly, updating their cloud services and products to protect businesses and consumers. For example, Microsoft has already updated its Internet Explorer browser. Google has updated its public cloud service. Apple has yet to comment on the issue. For Nightly Business Report, I'm Josh Lipton, San Francisco.
Macy's is cutting thousands of jobs, and that's where we begin tonight's market focus. The retailer said it would eliminate about 5,000 positions this year as it shutters more stores to streamline operations and cut its costs. The announcement comes after Macy's reported a 1% rise in holiday sales and said it was narrowing its full-year sales outlook. But Macy's also raised earnings expectations. Nonetheless, the shares fell 3% to $24.49. JCPenney said steady foot traffic and strong demand for jewelry and makeup helped the department store chain see positive same-store sales in the latest quarter. The company's e-commerce business also picked up steam, and JCPenney's also reaffirmed its fiscal 2017 outlook. Company shares were off a penny to $3.69. And Sears is planning to put more of its struggling stores on the chopping block. The retailer said more than 100 Sears and Kmart stores across the country will close their doors by April. Sears shares closed down nearly 5% to $3.58.
And sticking with retail, Walgreens Boots Alliance said a rise in prescription orders helped that chain grow overall revenue and same-store sales, even as the company's retail business underperformed. The results, along with profits, were above street expectations. Walgreens said it was hiking the lower end of its earnings guidance for 2018, and it expects to close its $4.5 billion acquisition of 2,000 Rite Aid stores this spring. Walgreens shares fell 5% to $71.60. And Walgreens rivals CVS said it expects to see a more than a $1 billion gain as a result of the new tax law. The pharmacy and retail chain also said operating profit will likely rise between 1% and 4% this year. Shares climbed more than 2% on the session to $75.13. And Costco said same-store sales rose more than 11% in December, helped by demand in the U.S. and abroad. The world's largest wholesale club retailer also said its e-commerce business performed well. Shares initially rose on the news, but then they fell fractionally to finish the regular session at 189.10.
And many industries are still trying to figure out the full impact of the recently passed tax bill, but there is one sector that most agree will likely be a big beneficiary, and that is manufacturing. Morgan Brennan explains.
So far, manufacturers have been largely upbeat about the tax overhaul, and for good reason. One model estimates manufacturers will see the biggest tax savings, more than $260 billion from 2018 through 2027. Not only will many likely benefit from a lower corporate rate, but two big changes could be game-changing: the shift to a territorial system and the adoption of full expensing. Nearly all of America's trade partners have territorial systems. Experts say implementing a similar model here in the U.S. will help manufacturers better compete against foreign rivals. And the expectation is at least some of the money will be reinvested stateside.
Shifting to a territorial system will, in fact, allow companies to move the cash back based on the tax that they paid in each jurisdiction, and it will actually, I think, promote certainly a level playing field and a fairness for U.S. companies to be able to operate kind of on a normal basis.
Factor in full expensing, which will enable companies to deduct the full purchase of new equipment up front, and there's much more impetus to invest and expand. Caterpillar, Rockwell Automation, and Deere could all win in two ways. The tax cut will help their bottom lines and also encourage other companies to buy more of their products.
There's no question this is the biggest market in the world. And now that the playing field has been leveled with Europe, Canada, and elsewhere, I think companies are increasingly going to look to position their operations closer to customers. It just makes a ton of sense that there will be a degree of investment spending brought back to the United States. I wouldn't overplay it. It's not necessarily going to happen quickly, but it can happen over time.
And only time will tell how many new jobs all of this actually creates. After all, automation and other technology is also rapidly transforming factory floors. But whether it's tax experts or Wall Street analysts or even the manufacturing companies themselves, the widely held belief is these changes will staunch the decades-long erosion of the American industrial base, meaning fewer jobs lost to places like Asia and Mexico. For Nightly Business Report, I'm Morgan Brennan.
Coming up, the big chill all along the East Coast.
This is a monster storm bearing down on New England, bringing business all but to a halt. I'm Contessa Brewer. Coming up on Nightly Business Report, we break down the hows, the whys, and what's to come.
Insurers will have to pay more than $130 billion in claims for 2017. That is the most ever. Hurricanes, fires, earthquakes pushed insured losses to a record last year, according to a new report from the German reinsurer Munich Re. Total losses, including uninsured ones, about $330 billion. That's the second worst in history.
The massive winter storm that's hitting the East Coast is packing heavy snow, very gusty, strong winds. Cities from North Carolina to Maine were under blizzard warnings, and as the storm intensified, about 4,000 flights were canceled and local economies came to a near standstill. Contessa Brewer is braving the cold for us tonight in Boston.
A blizzard bearing down on Boston. No way for this to be business as usual, with 2 to 3 inches of snow coming down every hour and visibility dangerously low. The Massachusetts governor urged workers to stay home and off the roads if they can.
No, because I got to pay the rent. There's no staying home.
Claude Brown and his coworker are out in it. A ticket for standing on the street.
$45.
Just another challenge to getting their construction job done.
Well, like now we have to move the van because it's the parking bin, and then later on tonight we're going to go have to shovel.
The roads are bad in spite of the salt. The plows working overtime to keep main roads clear. Thousands of flights canceled, planes grounded across the eastern seaboard. A snow day for schools, a work day for many. Power companies in Massachusetts hired extra crews to tackle broken power lines and downed trees. After more than a week of frigid temperatures, the trees are brittle and susceptible to snapping and blizzard-force winds of between 30 and 60 miles an hour. New Englanders themselves may be somewhat tougher.
I just came from the gym. I just went for a swim this morning. There were people there, but the good part is I had my own lane. Yeah. But it's, you know, we're hardy, so we can be out and about.
Roughly 60,000 companies in Boston, many of them closed for the storm. Hospitals, hotels, and others provided overnight accommodations for essential staff. The Patriots football players are hard at work, too, with Coach Bill Belichick telling his team they better show up on time for practice. The next phase following the snow is a dangerous, brutal cold snap. Especially vulnerable will be those who lose power. In Boston, Contessa Brewer, Nightly Business Report.
Boy, I'm glad I'm here in a nice warm studio. Before we go, here's another look at the record-setting day on Wall Street. The Dow advanced 152 points, topping 25,000 for the first time ever. NASDAQ added a dozen, and the S&P 500 was up almost 11.
What a day.
Cold night.
Yeah,
cold day.
Cold night, but drive carefully if you're out there. That's Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us.
And thanks from me as well. I'm Tyler Matheson. Have a great evening, everyone. Stay warm. We'll see you tomorrow.